There is one industry that is highly dependent on the oil market, and that's the crude tanker industry, because all that crude has to be shipped and hauled across the globe. And this coming quarter could be especially strong for this sector. Brennan explains.
With the world awash in oil and prices again under $50 a barrel, there's one market that's benefited: crude tanker ships. In the first half of 2015, rates for very large crude carriers that carry up to 2 million barrels per trip peaked at $90,000 a day, for some ships hauling oil to Asia. But by August, rates had plunged 70% as demand slowed down ahead of refinery maintenance season. Still, analysts say this sector is poised for its best fourth quarter in years.
We do think that the tanker market is going to see more upside as we move into the fourth quarter of this year. Seasonally see stronger demand from both a heating perspective and an overall energy consumption perspective in the fourth quarter. And we would expect to see, from a supply perspective, not a lot of incremental deliveries to the existing fleets.
Shipping rates are already rebounding, up nearly 50% from their August low. The demand is coming from Asia, where China is expected to build up crude reserves despite a slowing economy, to take advantage of higher refining margins. With low fuel costs a tailwind for earnings, and only a limited number of new ships coming online through next year, all of this could bode well for stocks like Euronav, Nordic American Tankers, and DHT Holdings. Small cap names, but ones that represent pure plays in this market. TK Tankers, Frontline, and Tacos Energy Navigation could also benefit, since all have crude tankers in their fleets as well.
Yeah, within the sector, we have buy ratings on two key players that are very well exposed to this trend. The first is Euronav, which is our top pick in the space. The second is Generate Maritime. We also have a buy there. Both of these companies have significant spot exposure to the very largest of the crude carriers that move crude around the world globally.
Another potential positive: if sanctions on Iran are lifted, that could add an estimated 500 to 700,000 barrels of oil daily to the global supply, pressuring prices and further boosting demand for these massive ships that haul crude across the high seas. For a Nightly Business Report, I'm Brennan.